Let's talk about some of the problem areas, because there are some areas of the economy that look like they're doing pretty well. There are other areas that definitely are not. Obviously, you think of travel-related issues, retail-related issues in a lot of places that have been shut down, and maybe small businesses where they don't have the depth and the deep balance sheet to be able to see through something like this. If you think about those three areas of concern, is there a bank or several banks that you would be more worried about than others if you're looking at those that have, I don't know, a lot of exposure to REITs or something along those lines?
Well, the reality is the smaller the bank, the smaller the customer, the more issues there are. What you saw in March were large loan drawdowns by large corporations. That is transferred to the capital markets, the fixed income markets, and now you might go to another stage of re-equification. So you've gone from loans to bonds, maybe to equities for the largest customers. Unfortunately, the smaller customers at the smaller banks don't have the same capital markets access. So those are some risky areas in those industries that you mentioned, like, travel and hotel and some others and small businesses. And so these are sobering times. This is no easy call. Our point is that, our point is just that banks are resilient enough to absorb these problems, still support the economy, and still have enough left over to continue to pay their dividends, which we do think will be the result of the Fed stress test for most banks. And, if I were king of banks, I would simply say, don't resume the buybacks, largest banks. Don't raise your dividends, largest banks, the next couple quarters. But also don't force the banks to cut their dividends either. Keep it the status quo unless specific banks, the bank boards decide they're paying out too much of their earnings in dividends. Then you might have a couple dividend cuts that way. But otherwise, keep the status quo. But meanwhile, come back to the banking industry in the fourth quarter. And that's what the Fed will be doing as it looks at this COVID overlay. And the speech last Friday from the Fed said they just simply need more time. There's too much uncertainty. So, I would consider this almost like part one of the Fed stress test. Part two will be a lot more private later this year.